It's strange, isn't it? Everyone's watching Bitcoin, AI stocks, and meme coins, yet the quiet rally happening in gold miners barely makes the headlines. The same market that once called gold dead money is now pretending not to notice as these miners surge beneath the noise. I've seen this pattern before. Every real bull market begins in silence when the crowd is distracted and the patient are rewarded. What we're seeing isn't luck, it's the market whispering a truth that most have forgotten. Real value doesn't shout. Gold miners are rising not out of hype, but out of necessity, out of a system cracking under its own weight. Watch till the end, because once you understand why this move is happening, you'll never look at quiet markets the same way again. Don't forget to subscribe and like. It always starts quietly, not with headlines, not with hype, just silence, the kind that makes you wonder if the market has fallen asleep. But I've learned that silence is never empty. It's the sound of smart money moving while the crowd's distracted. It's the calm before the surge. You see, real moves, the ones that change everything, never begin in noise. They begin when everyone's bored, fearful, or simply done caring. That's when the strong hands start buying. That's when conviction quietly replaces confusion. I've seen this before. Every major gold rally I've lived through began in disbelief. The miners would move first, small, subtle, unnoticed. The headlines would ignore them. The analysts would call it a dead cat bounce. And the same crowd that mocks gold now would laugh then too. But markets have a cruel sense of irony. They reward the patient and they punish the popular. When gold miners start stirring, it's never random, it's strategic. Smart capital accumulates before the story makes sense, before the numbers align, before the media catches on. It's the oldest pattern in finance. Accumulation in the dark, explosion in the light. The miners feel it first because they live at the edge of reality. They don't deal in theories or forecasts. They deal in the earth itself. They know when something's shifting. They sense the turn before economists write about it. And right now, I feel that same quiet pressure again, that subtle hum in the market's background. It's almost like deja vu, the same disbelief, the same neglect, the same quiet buying. People always say, I'll buy when it's confirmed, but by the time it's confirmed, it's already gone. You don't make money waiting for permission. You make it by recognizing the silence for what it is, opportunity disguised as boredom. That's the emotional challenge, isn't it? To trust yourself when no one's cheering, to stay calm while others panic, to see value when everyone else sees risk. That's what separates investors from spectators. The calm before the surge tests your conviction more than any crash ever could, because nothing feels harder than believing in something invisible until it suddenly becomes undeniable. Every bull run I've seen was born in that same silence. At first, no one cared. Then everyone doubted. Then suddenly, everyone wanted in. But by then, the ones who acted early were already miles ahead. It's human nature. We seek safety in crowds, even when the crowd's running in the wrong direction. But the market doesn't reward comfort. It rewards clarity, and clarity rarely comes with company. So when I look at the gold miners today, I don't see noise. I see setup. I see patience. I see that same invisible shift I've seen before every major rally. And I remind myself, wealth doesn't announce itself. It accumulates quietly, and then one day it erupts. So if you hear nothing right now, if you feel like the market's asleep, remember this: silence isn't the absence of movement. It's the preparation for it. And when the calm finally breaks, you'll know exactly who was listening. It always begins with a promise that paper will hold its value. That numbers on a screen can stand in for real wealth. That confidence alone is enough to keep everything from falling apart. But confidence isn't collateral, and lately, those promises are starting to crack. You can see it in the strain of central banks, in the endless refinancing, in the quiet panic behind every new policy announcement. They tell us the system is stable, but stability doesn't need to be declared every week. When something's truly strong, it doesn't require reassurance. It just, the truth is the paper world has been stretched too far. Debt on top of debt, yield without backing, profit without production. It's a beautiful illusion until it isn't. For years, people chased returns on promises that didn't exist. They believed the numbers because they wanted to believe the comfort. But comfort is expensive, and eventually someone has to pay for it. That's why the miners are waking up. That's why gold is whispering again, because when paper starts to tremble, reality begins to matter. And miners deal in reality. They don't trade illusions. They pull wealth out of the earth, ounce by ounce, with sweat and steel. Their business doesn't depend on confidence. It depends on physics. You can't print an ounce of gold. You can't legislate scarcity. You can't inflate geology. That's what makes this shift so powerful. It's not just financial, it's psychological. People are beginning to remember what a real feels like. For years, markets rewarded what glittered on paper: tech fantasies, speculative coins, debt-funded buybacks. But now the glitter is fading, and the truth underneath is rough, heavy, and unmistakably real. Gold miners are being quietly repriced, not because of hype, but because reality is making a comeback. You can sense it in how investors talk. The tone has changed. The arrogance is gone. Now it's questions: soft, cautious, uncertain. Eyes fiat still safe? Air rates even real anymore? Should I hold something physical? Those questions mark the beginning of awakening, because every system built on trust eventually faces the test of proof, and proof in the end is always tangible. This is the stage where the paper promise starts to lose its charm. People don't admit it openly, not yet, but deep down they know. They feel the imbalance, the unease, the quiet realization that wealth built on leverage is like a house built on wind. And that's when attention shifts slowly, silently, toward the things that last, toward gold, toward miners, toward the fundamentals no one can counterfeit. It's ironic, really. The same system that mocked gold for being barbaric is now realizing that barbarism might have been wisdom all along, because in the end, it's not just about price, it's about principle. When paper cracks, principles matter. When yield evaporates, value returns. And when illusion fades, substance shines. That's what this market cycle is teaching, that what you can't print, you can trust. And the miners quietly grinding beneath the surface are the first to feel that shift. They've seen the game before. They know the sound of cracking paper, and they know exactly what comes after. Because when faith in the promise Paydays. People don't seek profit. They seek proof. Everyone talks about leverage like it's magic, as if it's some secret switch that multiplies money without consequence. But leverage was never meant to be about illusion. It was meant to be about effort, about how much reality you can move with the tools you hold. Today, people chase digital leverage, options, futures, memes, stocks, crypto derivatives like moths drawn to a screen's glow. They call it innovation. I call it disconnection, because leverage without labor isn't strength, it's speculation. And speculation without grounding is just air dressed as wealth. You see gold miners live on a different kind of leverage. It's not hype driven or algorithm fed, it's earned. When gold moves 10%, miners can move 30, not because of magic, but because of mechanics, because their value scales with the metal itself. Every extra dollar on an ounce of gold ripples through their margins like a tide through a harbor. That's real leverage built on soil, sweat, and scarcity. It's the leverage of productivity, not prediction. But no one teaches that anymore. They teach shortcuts, screens over shovels, momentum over fundamentals, as if 1,000 traders clicking buy can replace the decades it takes to dig a mine, build a shaft, or refine ore. The irony is painful. The same people who chase risk for thrill ignore the oldest and most reliable leverage on Earth. They want excitement, not endurance. But markets have a way of humbling excitement, because eventually every illusion collides with physics. You can't out-leverage gravity. You can't out-code geology. You can't replace productivity with probability forever. When the storm hits, and it always does, the difference between paper leverage and productive leverage becomes obvious. Paper leverage implodes. Productive leverage endures. That's what makes gold miners so fascinating to me. They operate in silence, building balance sheets out of rock and patience, while the rest of the world gambles with pixels and promises. They represent something ancient, the idea that wealth is born from nut work, not whim. And when the price of gold shifts, their world transforms, not because of hype, but because every ounce becomes more valuable to the system that forgot what value means. It's funny, isn't it? Everyone talks about wanting exposure to assets, to growth, to opportunity. But the real exposure most investors avoid is exposure to what's reality. Reality requires discipline. Reality carries weight. Reality doesn't refresh every second on your phone. It grows slowly beneath your feet. That's the leverage people have forgotten. The leverage of doing something real, something tangible, something that lasts beyond the next trend. Gold miners are a mirror for that truth. Their gains don't come from wishful thinking. They come from extraction, from endurance, from the long game. And that's why their leverage is different. It's not digital exaggeration. It's natural amplification. Because when gold rises, it validates every decision they made when the world wasn't watching. That's leverage. Not borrowed money, but borrowed time turned into value through resilience. And when I look at these miners now, I see more than companies. I see reminders that leverage, real leverage, isn't about chasing risk. It's about mastering it. And that's something no chart, no coin, and no algorithm can ever replicate. Markets have a short memory. They're obsessed with noise, flashy headlines, viral trends. The next big thing, that everyone can talk about for 30 seconds before moving on. And in that chaos, real opportunity hides. Gold miners, they're boring, no memes, no overnight riches, just steady work, slow growth, and results that accumulate quietly. Most investors can't handle that. They scroll past it, they yawn at it. They assume nothing's happening. That's the psychology of neglect. We ignore what's slow because attention is wired for excitement. We crave dopamine over discipline. We reward what moves fast, not what matters. But markets have a cruel sense of humor because excitement often precedes regret, and neglect often precedes fortune. I've learned to read the silence, to pay attention to what no one else is talking about, to watch the miners move while everyone else chases the next shiny object. It's counterintuitive, isn't it? The very assets people dismiss, the ones that seem dull and unsexy, are often the ones that hold the most potential. Gold miners thrive in that neglect. They accumulate value while others ignore them. They build resilience while speculation burns out. And the emotional lesson: patience becomes power. Boredom becomes an advantage. Every market cycle reinforces it. The crowd flocks to noise, and the quiet investors collect the rewards. I've seen this pattern repeat countless times. Investors chase trends with their hearts, not their heads. They panic when the next fad slows down. They sell when the crowd cheers too loudly. Meanwhile, the neglected assets keep working, silently compounding. It's a paradox. The less exciting something is, the more powerful it can become. And that's the challenge for anyone who wants real wealth. You have to embrace boredom. You have to sit through the silence. You have to ignore the need for constant validation, because the world rewards the patient, the attentive, the ones who see beyond the flash. Gold miners are a perfect example. They teach you to value consistency over chaos, to trust fundamentals when everyone else trusts sentiment, and to understand that true market psychology isn't about the loudest voices. It's about recognizing the subtle signals others ignore. Every dip, every quiet rally, every understated move carries a lesson. The lesson is simple: neglect is not weakness. It's a sign, it's a doorway to those willing to pay attention, to those willing to wait, to those who can see through distraction to the reality beneath. When I look at the mining sector today, I don't feel fear or excitement. I feel clarity. I feel patience. And I know that while the crowd chases noise, the real opportunity is quietly working for those who care to notice. Because in markets, boredom is often the precursor to brilliance. Neglect is often the precursor to wealth. And understanding that separates spectators from investors. Gold doesn't just appear. It's not conjured from thin air. No matter what some paper promises might suggest, every ounce carries a story of heat, of pressure, of time measured in millions of years. And when miners bring it to the surface, it's more than metal. It's energy transformed into permanence. I've watched mining operations enough to feel it, the sheer force required to extract value from the earth. Drills spinning, rock breaking, sweat falling, all concentrated into a small, shining token of wealth. That's why miners aren't just companies, they're vessels of human effort scaled by geology. Every ounce costs more to produce today than it did yesterday. Resources are scarcer. Labor is more specialized. Equipment is more expensive. And that cost isn't a liability, it's a signal. It tells you that every ounce now carries more intrinsic worth than the last. It's a kind of leverage embedded in reality. While the world talks about leverage in tweets and charts, miners live it in the trenches. And that's the lesson I keep returning to: respect. Respect for work, respect for scarcity, respect for value that cannot be printed or coded. When I think about investing in miners, it's not speculation I admire. It's the understanding that wealth is created before it's counted, before markets price it, before headlines notice it. Every ounce mined is proof that energy, effort, and time cannot be erased. It's permanence that outlasts panic and hype. The psychology of this is profound. When you internalize that value is tied to effort, it changes how you view markets. You stop chasing illusions. You stop gambling on promises. You start valuing work. You start valuing endurance. That's why the mining sector moves ahead of sentiment, because what's mined isn't just metal. It's truth. It's the embodiment of reality asserting itself against speculation. When production costs rise, prices follow. But more than that, the market begins to honor the effort behind the asset. And investors who recognize this early gain a quiet advantage. They understand that what others dismiss as boring or slow is actually a repository of human and natural energy. Every ounce represents a convergence of geology and human will. It's a reminder that wealth isn't accidental. It's intentional. It's labor and patience crystallized. When I reflect on the miners, I feel humility. I feel clarity. I feel the quiet reassurance that real value always leaves a mark. Even if the market is blind for a moment, the energy beneath the ground isn't just physical, it's symbolic. It's the work ethic of centuries compressed into something tangible. And that's why emotionally investing here feels different. It feels grounded, it feels earned, because every ounce mined reminds me of a truth too many forget: real wealth comes from real work and nothing else. We live in an age that worships speed, instant wealth, instant news, instant validation. Screens light up with numbers that fluctuate by the second, and we are told that this is where value lies. Crypto. Meme stocks, tech startups promising the moon. It all feels exhilarating until it doesn't, because digital wealth is fragile. It exists as long as the server does. As long as the code doesn't break, as long as the narrative stays positive, and when those conditions fail, when hype collapses or confidence wavers, the illusion evaporates in an instant. Contrast that with gold miners. Every ounce they produce is proof against time. It's not dependent on algorithms or social sentiment. It's a piece of reality, geological reality, human effort, permanence compressed into metal. Miners are converting the labor of centuries and scarcity into something the digital age can't erase. That's leverage you can feel. That's wealth you can trust. The psychological lesson here is brutal but necessary. We've been trained to equate movement with progress, excitement with security, speed with mastery. But speed is fleeting, excitement fades, and mastery without foundation is empty. I've watched overconfident investors pour into crypto when charts looked promising, only to panic when volatility arrived. I've watched tech stocks soar on narrative alone, ignoring fundamentals until the crash humbles everyone. Meanwhile, miners keep working silently, consistently, producing real, tangible value while the world chases shadows. The emotional shift I want you to feel is subtle but powerful. It's the movement from speed to substance, from hype to heritage, from illusion to reality. It's realizing that wealth built on permanence doesn't need tweets, posts, or trending hashtags. It just exists, and the markets eventually recognize it. Sometimes, suddenly, often belatedly, always inevitably. There's a certain serenity in that truth, a confidence that isn't dependent on the crowd. Because while the digital age can make anyone feel rich for a moment, it can also take it away in a heartbeat. Miners, on the other hand, transform effort and geology into something immutable, something the market may ignore today, but cannot ignore forever. That's the beauty of substance, the allure of permanence. And it's why I watch the gold mining sector with a different lens than most investors. I don't chase volatility. I respect endurance. I measure progress in ounces extracted, not hype generated. I know that what survives the test of time, what withstands panic, speculation, and the fleeting confidence of the digital age is what truly matters. So while the world obsesses over screens and narratives, I focus on the ground beneath our feet, because there, in the earth and the work of miners, lies a truth the digital age can never replicate. Real value is built, not coded, and that perspective changes everything. You learn a lot by listening, not to the headlines, not to the talking heads on TV, but to the silence in between. That's where smart money speaks, quietly, subtly, undetected by the masses. I've seen it before. When the public ridicules gold or dismisses miners as outdated, that's usually the exact moment institutions are moving in. Banks, hedge funds, major funds, they don't need tweets to justify their positions. They move like shadows, accumulating quietly, waiting for the world to catch up. These are the whisper trades, small at first, then growing, almost invisible if you don't know where to look. And the emotional lesson here is profound. The loudest opinions in markets, the ones screaming the most, writing the most columns, trending the most online, are often the poorest performers. Crowds chase excitement, not fundamentals. And while the mob is distracted by memes, by headlines, by hype, real wealth quietly changes hands. I've watched institutional flows build layers of advantage over months, sometimes years, while retail investors complain about missing the rally. It's not luck, it's patience, it's discipline, it's understanding where real value resides, even when everyone else laughs. The miners are a perfect example. While everyone else debates crypto, tech, or the next get rich quick fad, institutions are quietly stacking positions in gold producers. They're playing a long game, a game that doesn't need public approval. And if you pay attention, you can sense it. In rising accumulation, subtle volume shifts, muted commentary, the whispers are all around you. If you choose to hear them, I've realized that markets are always telling you something. It's just that most people only listen to noise. The whisper of smart money is a reminder wealth rarely announces itself with fanfare. It moves quietly. It builds under the radar, and it rewards those patient enough to notice. Emotionally, this is challenging because you're constantly tempted to react to the headlines, to chase the crowd, to follow fear and hype rather than judgment and observation. But the truth is simple. Those who follow the whispers, the subtle signals of real capital, consistently outperform those who follow the noise. They see the accumulation before the breakout, the calm before the surge. the shift before the market realizes it exists. And that's what gives them an edge. It's not about insider knowledge in the illegal sense. It's about observation, interpretation, and understanding human behavior at scale. Because institutions think in terms of time horizons we rarely consider. They buy when fear dominates. They stay when doubt reigns, and they profit when the crowd finally notices. So if you want to understand the market, don't follow the headlines, follow the whispers, watch the subtle moves, listen to the quiet accumulation, because that's where real wealth is born. And if you can train yourself to hear it, to trust it, you'll find yourself ahead of the crowd long before anyone else even notices the story has changed. Trust is fragile. We hand it out every day to banks, governments, institutions, and promises on paper. And for a long time, we believed it would be enough. We believed that numbers on a screen could replace reality. We believed that policies could create stability where there was none, but reality doesn't obey belief. It obeys laws, scarcity, and effort. That's why gold miners are more than just investments. Every ounce they extract is a statement, a vote of no confidence in the system. It's subtle, quiet, and yet powerful. Every time a miner brings gold to the surface, it's a rebellion against inflation, against manipulation, against the slow erosion of financial memory. We are trained to trust headlines, to trust institutions, to trust assurances. And yet, when those assurances fail, the miners remain, the metal remains. It doesn't blink. It doesn't require consensus. It doesn't expire in 10 years like a bond. I reflect on this often. There's something profoundly human about storing trust underground in metal rather than in promises. It's a kind of rational survival instinct disguised as investment, not nostalgia, not obsession with the past. Just understanding that permanence matters. It's emotional clarity wrapped in financial logic. I've watched markets elevate illusions while undervaluing reality, and I've seen panic when the illusion fades. Miners, by contrast, are patient. They work through the cycles indifferent to the mood of the market. And when the tide of trust begins to shift, they are already positioned ahead. There's an almost poetic symmetry here. The system erodes, trust falters, fear grows, and those who stored value where it cannot be printed in earth and effort find themselves quietly vindicated. It's a psychological turning point because investing in miners isn't just about money. It's about understanding the limitations of human systems. It's about acknowledging that faith in promises alone is fragile. And it's about acting rationally even when others act emotionally. The emotional arc is deep. It begins with doubt, with frustration, with recognition that the world you relied on might not keep its word. And it resolves with calm certainty, with the realization that reality endures. Gold miners are more than a hedge. They're a reflection of what is reliable when everything else feels unreliable. They teach patience. They teach respect for scarcity. They teach that trust, when placed correctly, can survive chaos. And that's why the turning tide of trust matters so much, because it signals the moment when rationality overtakes panic, when permanence overtakes promises, when reality quietly reasserts itself over illusion. And if you recognize that moment, if you place your trust where it cannot be created or destroyed, you don't just survive uncertainty, you profit from clarity, because in a world built on fragile promises, True trust is the rarest asset of all, not because people can't wait, but because waiting is uncomfortable. It's uncomfortable to hold when everyone around you is laughing, to believe in value that no one else sees yet. I've been there, watching others sell in panic, chase trends, or mock what I considered real. It stings. It tests your conviction. But that discomfort is precisely where the edge exists. Markets reward the patient, not the impulsive, not the loudest, not the ones chasing the next headline. They reward those who endure, those who can sit through ridicule, skepticism, and doubt without waver. Holding miners through cycles of neglect isn't glamorous. It's not exciting. It's emotionally taxing. You constantly question yourself, am I missing something? Am I wrong? And yet, that's where true investing begins, not in thrill, but in conviction. Patience itself becomes a weapon. Every day you resist panic, every day you ignore distraction, you gain an advantage. Speculators move with emotion. They react to fear. They follow hype. Stewards act with purpose. They see the long arc of value, even when it's invisible to the crowd. I've held positions through bear markets that felt endless, through dips that made headlines scream, through moments when the world mocked gold, miners, and all things tangible. And in each case, patience was vindicated, not overnight, not with drama, but steadily, like a tide reshaping the shore. That's the emotional lesson. Patience isn't passive. It's active discipline. It requires constant self-reminding, constant trust in your own analysis, and constant resistance to the lure of instant gratification. Every investor wants quick wins. Every speculator chases momentum. But true wealth is built by wading through noise, by holding when it's lonely, by believing when others doubt. That's why gold miners appeal to me. Their cycles demand patience. They reward it. They punish impatience. And the psychological edge is clear. You gain clarity while others panic. You gain conviction while others follow whims. You gain perspective while others lose perspective. Every day you practice patience. You internalize a deeper truth about markets and about yourself, that markets are not just a test of intellect, but of emotional endurance. That wealth is not about being first, but about being right when it matters. And that's the paradox. By waiting, you move ahead. By holding, you gain freedom. By believing, you earn advantage. The discipline of patience is silent. It is invisible to the crowd, but it is among the most powerful tools an investor can possess. Because when the tide finally turns, when recognition arrives, those who held patiently aren't just lucky, they are prepared. And in markets that reward endurance over impulse, that preparation is everything. Patience is not just waiting. It's winning quietly with purpose through conviction. And that's why it will always separate speculators from stewards. I can feel it coming, not in headlines, not in viral chatter, but in the quiet undercurrent of markets. Gold miners are moving silently, methodically, just as they always do before the world catches on and the masses. They're still blind, still distracted by the noise, still chasing fleeting excitement elsewhere. That's the beauty of early recognition. You see the shift before it's announced. You understand the cycle while others debate the last fad. This isn't about charts or candlesticks or predicting the exact day. It's about pattern psychology and human behavior. The miners have a rhythm. They surge before the sentiment catches up, And when the crowd finally notices, the opportunity will already be behind them. I've seen it happen countless times. The first whispers of accumulation go unnoticed. Then the quiet rally builds momentum. Then suddenly, everyone is watching, everyone is scrambling. And by then, the edge belongs to those who prepared in silence. Emotionally, this is profound because there's a thrill in being ahead, but it's tempered by calm. You don't gloat. You don't panic. You simply understand that timing is everything and early understanding is priceless. I think about what it means to see early and act early. It's not greed, it's clarity, it's conviction married to patience, it's the ability to trust reality over rumor. The next bull market in gold miners will roar. And when it does, it won't just be a spike in charts. It will be an echo, a reverberation through the market, across sentiment, and through generations of investors. Because truth, once buried, never stays hidden forever. It asserts itself, it demands recognition, and it rewards those who were attentive. The emotional lesson is simple: don't wait for validation. Don't follow the crowd. Understand the cycles. See the patterns. Act with discipline. Because when the tide turns, the early movers gain not just profits, but perspective. Perspective that lasts far longer than any single market cycle. I imagine the day when everyone finally notices the rally, the headlines screaming, the pundits praising, the crowd rushing in, and I feel a quiet certainty because I already know the story. I've watched the miners move. I've understood the psychology. I've honored the cycles, and that knowledge, that early insight is priceless. The echo of the next bull market won't just be a sound, it will be a lesson for anyone paying attention. A reminder that value exists long before recognition. That cycles repeat. That truth, persistent and patient, always rises. And when the world finally catches up, those who saw it first will already be ready. Because in markets, as in life, the advantage belongs to those who understand what is real before everyone else notices. And that is why the next bull market will echo, not just in prices, but in wisdom, discipline, and the quiet triumph of insight over noise.